In today's video, we'll be going over why looking poor is important as a business owner. As a CPA and tax expert with 15 plus years of experience working with businesses of all sizes, I've seen a clear pattern among successful businesses. They all appear to make a lot less than they actually do. That's exactly why we're making this video today, to show you why appearing less flashy can actually help your business thrive and save you significantly more in taxes. Let's dive right into it. So the number one topic that I want to talk about first is this idea of spending and taking advantage of what's available to you as a business owner. And we talk about this a lot, that the government gives business owners an incentive. The government wants business owners. And so how do they encourage people to become business owners? They give you an incentive. And one of that incentive is the ability to offset your income. So just remember, as a W-2 worker, you have your gross wages and you have all these taxes taken out, and then you get your take-home pay. And that's the money that you actually receive. And any spending or things you purchase or anything like that with that take-home money is considered after-tax spending. But as a business owner, we have our sales or our revenue, and then we have all these business expenses that we get to use to offset it. And then whatever's left over is our profit, our business profit, and that is what we get taxed on. And so the more that we can take expenses and utilize those expenses to offset our income, the less profit that we're going to show, which means the less taxes that we're going to pay. Now, one thing about this concept, when I talk about spending, I'm not saying going out and buying things you don't need, going out and buying a new truck, going out and buying all these things you don't need. No, what I am talking about here is taking spending that you're doing anyway, spending that you're going to do whether you're a business owner or not, but finding a business purpose for it. And now, instead of using after-tax dollars on that spending, you're using pre-tax dollars. You're finding a business purpose. You're bringing that into the business and getting pre-tax dollars. It's reducing, offsetting the income from your business, reducing your profit, and thus reducing your taxes. So think of things like a home office deduction or an automobile deduction, or maybe hiring your kids, or maybe meals and travel. And how do we find business purpose for the spending that we're going to do anyways? But now we're just moving it. Instead of using personal after-tax dollars, we're finding that business purpose and moving it to a pre-tax expense. That's the power around this idea. Now, the consequences, if you don't take advantage of these opportunities, and we see business owners every single day not taking advantage of what's available to them. And the consequence of that is you have more taxes. You're paying more in taxes because you have more profit in your business. And remember, as a pass-through entity, which most small businesses are, you pay taxes on the profit of your business. So it's important to take spending seriously. Take what's available to you. Take that incentive that the government gives you and take advantage of it. Utilize it to offset your income, which thus will lower your profit, which thus will lower your taxes. Now, one thing that we kind of get from this, a lot of people say, well, Mike, I'm struggling to get a loan because, I'm lowering my profit and now I'm showing little profit and I want to buy a new house. I want to go buy something where I need a loan and I'm struggling with that. And the biggest thing that I can say there is work with a loan professional, a mortgage professional that understands business owners, because there's these things called add backs, where if we're taking advantage of a home office and we're taking advantage of a business use of a personal automobile deduction, we're taking advantage of hiring our kids, we can talk to that mortgage person that understands businesses, understands entrepreneurs, and they have things called add backs. We add back some of these expenses into your income because the mortgage officer can see, hey, if we're hiring our kids in our business, we're going to hire our kids anyways, but now we're using our business. They're doing work for us. We're using our business as a tool to take a tax advantage of that. And the loan officer, if they understand how entrepreneurs work, understand how businesses work, can money through that. If you're just going for a local down the branch practice that doesn't understand businesses, yeah, they might see a lower profit and say, hey, we can't give you a loan. But find someone that knows what they're doing. The other consequence, or the other thing that comes up, is people say, well, I'm looking to sell my business in the future. I want to make sure that I'm not lowering my profit because that's likely going to lower the amount that I'm going to get in the eventual sale of that business. And first things, you can also have add backs in this situation where you can talk to the person buying your business, and we can do what they call add backs. Same thing as a mortgage officer, where we're adding back some of these items that really wouldn't be per se necessary for this business to run. If you sold your business, that new business likely isn't going to hire your kids, likely isn't going to have your home office, all those different items. So we can use things like add backs there. But with that being said, sometimes we would talk to a business owner and look at their situation. And sometimes we might take a little less on the deductions to help boost that profit, especially if they're looking at a sale within the next 3 to 5 years. But that's really just going to be a case-by-case basis in looking at it. So spending is an extremely powerful tool that we can use to lower the profit of your business and thus lower your taxes. And we're not just spending money to get a tax break. That's not what we're talking about. we're saying, how can we take spending, look at the spending that we're already doing, and is there a business purpose for some of that spending, or at least a portion of that spending, that we can move from after-tax spending into pre-tax spending? That's number one. Now, what we can do here is that we can only break down these items in a small amount of detail here because we only have a short amount of time right now. So if you want to learn more about how to maximize your business's value using tax deductions and how to optimize your tax plan, click the link in the description for a free guide. All right, point number 2 is reinvesting profit. And this goes along that same line. How can we reinvest your profit to help your business grow? And maybe it's buying equipment. Maybe it's buying a vehicle. Maybe you're a landscaper and you've been outsourcing any type of excavation type work. Well, could you buy some excavation equipment and utilize that and grow your business and start offering that as a service line? Well, you reinvesting that profit, you buying that piece of equipment, likely very high potential that could create a big year one deduction from that equipment purchase. And what does a big year one deduction do? It lowers your profit. It lowers the amount that you pay in taxes. So not only can taking, let's say you're a profitable business and you're like, we want to expand next year. What can we do? Well, if we buy some of these tools, we could really go in different areas and we can really grow our business. So not only now are we lowering your profit, reducing your taxes, but we're also buying equipment. We're buying tools that will help our business grow even further next year, increase our wealth while reducing our income in this year. So this is a powerful opportunity to take the profits from your business, reinvest it in tools, equipment, resources that can help your business grow. Now, don't go out and buy a new truck that you don't need just to have a new truck. Don't go out and buy a piece of equipment that you're never going to use and it's never going to utilize you just for the tax deductions. That's not what we're talking about. When we talk about reinvesting profits, we're reinvesting in something that can help our business grow while at the same time taking advantage of a lower profit this year because of the upfront deduction that we can get from that. So that's a great opportunity. Opportunity number 3 kind of goes along with that, and it's using leverage to your advantage. So let's look at that equipment purchase. Let's say you're going to buy a $100,000 piece of equipment, and let's say you had $100,000 in income in your business. We go out and buy that $100,000 piece of equipment. We can offset likely majority, or at least a good portion, if not all, of our income in that year with that purchase of $100,000. So a $100,000 purchase of a piece of equipment, reduce our income potentially by $100,000. But you also have to spend $100,000 to get there. But what if we could utilize leverage? What if we could find someone that says, you put 20% down and buy that same piece of equipment? So now we're putting $20,000 out of pocket, but we're getting a $100,000 deduction. That's this idea of utilizing leverage. We're not out that full amount in cash, but we're still getting that purchase cost, that full purchase cost by utilizing leverage. Now, this can make businesses look poor because, of course, we're having lower profit and we're adding a loan on the books, but it can be a super powerful way to get a deduction while also not having to have as much out-of-pocket spending in that first year. Let your business grow. Now that you bought that piece of equipment, your business is growing, that business is going to pay for that loan for you. That business is going to pay for that purchase for that piece of equipment without having to take all the cash and send it out. Now, be careful with this. Some of the consequences that we see people run into is they buy things, they put loans on things, and they get really a lot of loans out there that can really start to damper their business, where they have a lot of liabilities out on the books, and it can be stressful. So be smart in this area. Make smart purchases, use leverage when it makes sense. Some businesses use a lot of leverage, some businesses use no leverage. So it's really going to be up to you and your situation, but leverage can be a powerful tool where you don't have to have all that cash out of pocket up front, where you can utilize leverage, have a portion of cash up front, but still potentially be able to get that full deduction that we can reduce your income, reduce your profit, and thus reduce your taxes. Finally, the point I want to talk about to kind of wrap this up is this idea of money that's wrapped into retirement. So oftentimes people say, well, this business owner is doing really good, but you can't see it. They don't have new cars. They don't have a brand new house. They don't have all these things. But what you don't see is their retirement accounts. What's in their retirement accounts? Other business owners, you see these brand new houses, huge houses with big cars and big trucks and all this other stuff. But what you don't see is their retirement account. Maybe nothing's in their retirement. Maybe that first example, they have $1 million, $2 million, $3 million, $5 million in their retirement account. So putting money in a retirement account can sometimes make somebody look poor because you are saving that money. You're investing that money. Maybe it's in a brokerage account, but you're not utilizing it to just buy fancy, flashy type stuff. That's what makes people look rich, buying fancy type stuff. That doesn't necessarily mean that they are rich. That doesn't mean that they are that way. Putting money into a retirement account can be a powerful strategy for not only wealth building, security, asset protection, long-term growth, but oftentimes that money can be tax-free as well if we do it a smart way. Maybe we're putting money into a Roth. Maybe we're using some type of life insurance. Maybe we're doing different things. We're putting money into vehicles that will, in the future, provide us with tax-free income. Or maybe we're taking a deduction today. We're putting money into a traditional 401k and we're taking that deduction today. And that money's growing for us. That money's working for us. And yeah, it'll be taxable down the road, but that money is sitting there working for us while we're here still continuing to grow our business. And so that's why we see so many people that have come through TaxZone that have a ton of money, but you don't see it. They're not driving flashy cars. They're not having flashy houses. You don't see it. We have other people that come to TaxZone that have everything flashy. You look at it, you're like, holy cow, that's some really cool stuff. But then you look into the records, look into their investments, look into their assets, and you don't see much. So make smart decisions. That's not only going to be good for you today, but help your business today, but also be good for you down the road. How can we lower taxes today and build wealth and potentially have tax-free income down the road? Now, if you want unlimited tax consultations, immediately click the second link in the description below to get access to TaxZone, the software used by successful business owners all over the United States. All right, so now let's talk about the how. How do we take this? How do we put this in practice? How do we, you as the business owner, look poor, but still be on paper rich? How do we make that happen? So the first thing we want to talk about is take full advantage of government incentives. Look at the advantages that the government's given you. Think of this concept of maximizing deductions. How do we say, okay, how do we move things from after-tax spending into pre-tax spending? Make sure you're taking available of the items that are available to you, because guess what? The government's not going to knock on your door and say, hey, Mr. and Mrs. Smith, you didn't take your home office deduction, so we're going to take it for you. The government's not going to do that. It's in the tax code. It's in there, but it's your responsibility to learn that strategy and then implement it. So that's the key thing. You're here, you're learning. That's great. Now take the action to actually implement that. Put that strategy in place, because that's where the tax savings results are going to be. You can watch video after video. You're not going to save any taxes, but when you take that, what you've learned from those videos and implement it, that's where you see the tax savings. So we look at maximizing deductions. Maybe that's a home office deduction. Maybe that's making use of finding business use in a personal automobile that you have. Maybe that's hiring your kids in your business, or using the Augusta rule or 14-day home rental rule, or taking advantage of the meals and travel and finding ways to take travel that you want to do anyways, but turning it into a business expense. These are all those concepts of tax advantages that the government, incentives that the government has given you. It's your opportunity to learn them and put them in place and take advantage of them. The more of these you put in place, the more after-tax spending we turn into pre-tax spending, the more expenses we get into our business, the less profit we're showing, and thus the less amount that we're paying in taxes. Now be smart. Don't just buy things to get a tax deduction. Explore smart purchases that grow your business and wealth. If we're reinvesting into our business, if we're buying equipment or tools, or maybe even people that we're using to grow our business in the upcoming year, we can get a deduction for those items in year one oftentimes. But make smart choices. Don't buy equipment that you don't need. Don't buy equipment that you're not going to use just for a tax deduction. Buy equipment that's going to help your business grow. And maybe we'll look into leverage. Maybe we're going to use leverage to buy some of those things that we can have less cash out of pocket today, get the full tax deduction today, let that asset or that thing that we purchased start to generate income from us. That's going to pay off the leverage and be a win-win situation for us. Next thing we want to say is look into next year. What would your business need to double that income from this year? So explore options on how to achieve that. If you did $100,000 this year in revenue, how do you get to 200 next year? What would need to be done? Is there something you could buy this year, get a tax advantage from that can help you get to 200 next year? What is that possibility? Sit down, start to plan out, make big goals. You might say, there's no way I'm going to go to $200,000. But if we needed to, if it was a requirement, if the government came in and said, you need to double your income next year, what are some things you might try? Maybe start to think about that. Maybe put some of those things into practice and see what happens from it. Finally, put money into a retirement account. Explore high cash value life insurance as potential options to let that money grow, earn tax-free in the background, and then potentially come out tax-free, or at least have that money growing for you. This is the way that many people do it. You want to have that nest egg. You want to have that money in there, because not only is it going to help ease stress, knowing that, hey, I'm taken care of, it allows you to be more aggressive as a business owner. It allows you to keep pushing forward to ensure that your business is growing as much as possible, while at the same time, you're paying the least amount of taxes as legally possible. Don't go out to just spend things. Don't buy the flashy stuff until it makes sense to. Take care of yourself first and then look at those next steps. So now that you know why successful business owners often maintain a low profile, you need to understand one thing. These wealth hiding strategies are just the beginning of smart business tax planning. You can't walk away from this video thinking that driving an old car and living modestly is enough to protect your wealth. The truth is, we meet with business owners every week who thought they were smart about their image, but we're still losing thousands in unnecessary taxes and attracting unwanted attention from the IRS. From asset structuring to income splitting to strategic business expenses that actually build wealth while lowering your tax burden, there's so much more that goes into protecting what you've built, your business. If you want to further optimize your tax plan and make sure that you're reducing next year's tax burden by this year's spending, click the first link in the description to get started with TaxHelm right away.